My name is Bill Gale. I'm the head of the RSP. I'm proud to say that we are convening the third most interesting event in Washington today. As you know, the Republicans released their tax plan earlier today. The Fed, the administration is going to announce its nominee for the Fed chair this afternoon. So amidst all of that, I'm hoping that we can be a small island of sanity and thought and deliberation in what is likely to be quite a hyped-up city for most of the day. So turning to retirement savings, one of my pet peeves has always been that the retirement saving community in the U.S. Tends to ignore solutions and approaches that the rest of the world takes. And it's a little unsettling because every country has a retirement system, and there have been an enormously diverse set of policies that countries have chosen. And I've always thought that we could learn more, learn a lot that's useful by looking at what other countries do. And normally when we say that, we look to Latin American countries who have reformed Social Security, or European countries and all the changes they've made. And then David John, my co-conspirator at RSP, came along a couple months ago and said, hey, we should look at what Canada is doing. They've done some very interesting things. And most importantly, we could learn from this for how to think about U.S. issues. So that's the origin of this event. I'm very happy that we set it up. We will be focusing on three issues that are relevant to the U.S. One is basic government-provided retirement benefits, or Social Security. The second is pensions for government workers. And the third is improving retirement outcome for low-income households and low-income workers. These are obviously key issues in the U.S., and they have been key issues in Canada as well. And the basic message of our event is that Canada has done a number of things that have been successful in their own right, and that we could potentially learn from in application to U.S. policies. We have a number of distinguished guests, both from the U.S. and from Canada. I will let the session organizers introduce them and just say we've got three panels set up, and I think you'll find all of them interesting. Again, our goal today is to learn from the Canadian experience, not to be cheerleaders for it, but to learn from it, both the successes and the challenges, and to use that knowledge to refocus discussion in the United States about how we can continue to address these ongoing issues. So without further ado, let me turn it over to the first panel and get you underway. So first panel, you come up and we'll be set.
Just pick a chair, any chair, and we'll go from there. All right? All right. Hey, not now. Gotta get some street cred back.
All right, welcome, and thanks for coming. Here, let me do this.
Just one slide.
Yeah. We are joined today by Hassan Youssef, the president of the Canadian Labour Congress, who will speak first on the Canada Pension Plan and give us first a brief overview of the Canadian system as it compares to the U.S., and then go on to discuss the recent reforms of the Canada Pension Plan, which expanded benefits for many individuals. And then Jason Fichtner will come up and give a reaction from the American perspective and compare and contrast. and then we will have a short discussion amongst ourselves, and then we open it up to you. The one rule with question and answer is that A, it has to be a question, and B, it can't last more than about 30 to 45 seconds. So with that, Hassan? There we are. I think the one here, let's see if that works. Yes.
I brought, let me, first of all, thanks for the invitation to share some of our experience in regard to the work leading into, of course, the expansion of the Canada Pension Plan. I brought the one slide behind me to kind of give you a bit of a synopsis of our system, and it kind of looked at the U.S. system versus the Canadian system. But I'll just highlight the most important features. The CPP obviously was to replace 25% of average earnings. The YMPE, which is about maximum you'll pay on right up in 2070, was about $55,300. And contribution, of course, is 4.95% from employee and the employer, a total of 9.9%, covering earnings from $3,005 up to $55,300. It's a fully annually cost of living indexation for all benefits, and it's adjusted on a yearly basis going forward. So the value of your retirement income doesn't lose, of course, it's going forward. It has a feature for early retirement as early as 60, of course, and you could postpone at the normal age of retirement at 65 and go on to 70, and you get a bit of benefit, increased benefit if you wait till 70. But if you go early, there's a slight reduction, obviously, and got a survivors, of course, benefit for spouse and common law partners and dependent. There's a disability benefit built into, obviously, to the plan. And a death benefit, I always say this because I thought it's the cutest thing you can say. This is one plan that promises you a check even after you die. And it's always have delivered. There's not a single person that I've met or family who've said they've not got their death benefit check from the CPP. Benefits, of course, can be divided on marriage dissolution and shared between the spouse at retirement. And there's in terms of the challenges that we were dealing with in terms of the expansion, of course, there'll be a phased in regarding to the expansion of starting next year. 2019 all the way to 2023 going forward. So I'll talk a little bit about our campaign, of course, to expand the Canada Pension Plan, which was very much almost 10 years I was immersed in it. And it was exciting, but at the same time was quite daunting and challenging. And in 2016, June 2016, in Vancouver, of course, the federal government and the provinces, of course, reached an agreement. It was historic because the first time in the history of the country the Canada Pension Plan was going to be expanded since its inception. And it took a lot of time and a lot of efforts to get there. In that time, of course, the short time I have available, I'll kind of highlight some of the features of the campaign and the minds that we had to overcome in terms of getting there. And it was, for the labor movement, this was an important campaign. We, of course, it was inspiring, has had a vision, very ambitious vision and goal. And of course, it was anchored on a very simple slogan, retirement security for everyone in the broadest terms. The goal, of course, was audacious for two reasons. First, the demands of expanding the Canada Pension Plan. Of course, when we launched the campaign, was in the midst of the global financial crisis. And I have to tell you, in an internal discussion in the labor movement, everybody thought we was mad to actually start this campaign in the middle of the recession. And more importantly, they just felt that, the ability to actually achieve the objective and bringing the province and the federal government together was never going to happen. So there was that kind of skepticism among our own colleagues. Second, of course, expand the pension plan was extremely difficult because amending the CPP requires two thresholds. The federal government, of course, with a minimum of 7 provinces representing 2/3 of the population. So you always had to have that equation. In absence of that, it didn't matter what you were doing. You will not succeed. And of course, in 2009, there was no strong proponent for CPP expansion in the country. Certainly not the provincial government, not the federal government, and nobody else other than the labor movement were making this argument. Achieving, of course, this audacious objective, of course, requires unity, focus, perseverance, and sheer determination. We had to build a campaign, a unified support for CPP expansion, requiring explaining to union members, of course, and leaders why they needed to support this effort and why they need to get behind it. And of course, most of our members, about 80% of our members, belong to workplace pension already. So in addition to the CPP benefit they would get when they retire, they also had a workplace plan for the most part. So most people are saying, why are we doing this? This doesn't make any sense. Why are we wasting our time and our resources on this campaign? And I'll come back to that in a minute. So we had to overcome that hurdle, of course, and then we had to build support among our own members. They had to understand that why the interest, of course, to fight for the expand was essential to universal pension, and of course, recognizing that the people who would get the greatest benefit of an expanded CPP was 66% of the population, represents about some 11 million Canadians, who their only pension was going to be the Canada Pension Plan. That was the motivation for the campaign to a large extent. There was a hidden message from us that we wanted to build a pension literacy among their members. There's a lot of, I'm sure, actuaries in the room, and I honor you for the work you do, but you have done a great disservice to our movement for the longest period. Because we have entrusted you to explain pension to our members, and I think you just confused them rather than educate them. So we felt we had to get to this in a very profound way, and if our members could understand pension, it was easy to convince them why this campaign was important. So the education part about, first of all, what is the CPP, what are the rules based on, more importantly, what are you going to get when they retire, and why you needed to take this campaign very seriously. And that was exciting to a large extent because the literacy among our activists was critical to try and understand our public system and, more importantly, why they should do that. The labor movement, of course, we had to build a broad coalition across the country. As you know, Canada is a big place, and there's a lot of interests. So we started off with working with the student movement, recognizing they will be future citizens. They would be the ones entering the workforce, and more importantly, not likely to work in a workplace where there'd be a pension plan. Anti-poverty group need to see this as an important part of their efforts in terms of trying to, of course, help the country achieve better results for poverty. Faith group to see this as an important campaign because it will, of course, help many folks in the country certainly have a better retirement. We had to build support around actuaries, economists, municipal councils, because our municipalities quite often have programs to help poor citizens in their own locale. And one of the first group that actually came on board to support the expansion of the CPP was the Canadian Federation of Municipalities. As a matter of fact, it was very profound. When I was there when they passed the resolution, without any opposition, unanimously to support the expanded Canada Pension Plan. The next day I got a call from our then Finance Minister, Jim Flaherty, said he wanted to have a chat, what the campaign was about. And of course, the Canadian Medical Association came on board supporting the campaign very explicitly because they saw it as an important part of dealing with seniors' poverty, and public health officials and others. Of course, the language, of course, was we used in the labor movement. After a lifetime of work, you should not live in poverty in the country. We could do better by expanding the CPP. Different argument was needed to sway different audiences, of course, and for non-unionized workers, this demand, of course, to ensure that they would get the greatest benefit if we expanded the CPP was important for them because this was one way for them to, of course, achieve a better pension because they didn't belong to a workplace pension other than the CPP. Older workers, of course, to reflect that they would have a lot of kids and grandkids who were starting out in the workplace and they didn't want to see their kids or grandkids live in poverty. So getting behind the campaign, and we had a lot of seniors who were supporting the campaign very publicly, lobbying and putting pressure on government and their elected officials. And this is a way for their kids to have financial security when they get older, and it would be a good thing if we could achieve this objective. Granted, many of our seniors in our labor movement either had a workplace pension or had something happen with their workplace pension that they saw we could do better by expanding the public system. Of course, the CPP the self-employed will directly benefit because in addition to them paying into this, most self-employed people, unless you were very rich or you did very well with your businesses, the only way to get a better pension plan was expanded CPP. For government, there was, of course, an argument for them why they should support this. In our public program, our old age security system or our GIS program is fully funded by the taxpayers. And of course, if you have more poor seniors, there would be more taxes required to fund the public system. And if you were getting people to save for their own retirement, clearly that government programs have to provide less of a basket of what you would need to support them. Of course, for unionized members, this was a real challenge because in many cases, they figure we already have a very good system of our pension. In addition to the CPP, we know where our top-up might get us to 70%, in some cases 65% for earnings. So what are we going to get out of this? And I said, well, there is an argument being out there for many people, which is 66% of the population who don't have a pension. There is this thing called pension envy. They figure if I don't have one, why do you have one? And they're not going to keep supporting you unless they can see something that's going to help them at the end of the day. And while you may pay a little bit more premium, it's also important for you to recognize the criticism of your workplace pension might be less, and it's one way to build public support that we all need a better pension, not just those who are fortunate to belong to the unions in this country. There was also another argument, not all, but a good number of our pension plans are integrated with the CPP. So if the CPP goes up, it will take some pressure off workplace pensions and hopefully assist us in regarding to stop the bleeding that's going on in trying to get rid of workplace pension. And of course, a large part of this is to deal with some of the criticism that comes. Some of the financial institutions were not thrilled. The banks, certainly insurance company, were very much engaged trying to prevent the federal government from supporting this. And we weren't threatening the other programs that exist, others that my colleagues will talk about. We have our Patriot's Retirement Savings Plan you could belong to. It's get a tax deduction for putting money into a program that will benefit you when you retire. There's a tax-free savings plan that was there also. We weren't arguing we should end these programs. We're simply saying this will be a good feature and going forward. So in that sense, I think we kind of muted their criticism as why they were opposed to expanding the Canada Pension Plan. Of course, and more importantly, of course, the Canada Pension Plan had the lowest administration fee in providing the benefit that people got at the end of the day. So we were able to come back. Of course, Labor's, our proposal was to double the CPP. We didn't just want what we ended up with. We wanted actually to increase the CPP by 100%. Now, we are trade unionists. We know how to bargain. But we figured we had to set the demand up here, and somewhere during the process, we might get to someplace we can agree on. But if we set the bar here, then we would just end up someplace much lower. And we were quite comfortable with demanding that we need to double the CPP. And we thought this would be a good thing. Nobody could argue why it wouldn't double the CPP, because the average CPP payout for the majority of Canadians that were getting it was about $550 to $560 for male. For women, it was even lower on the average. So nobody could argue if you double the benefit, people will be too rich.
Per month, right?
Yeah. So I think it resonated with a lot of people who understood the argument. Many of our members, of course, and the public recognized that. And of course, we had to work. The biggest challenge with this campaign for the Congress is that this was financial ministers from the provinces that had to make the decision. It was them that we had to convince that this was a good argument, and more importantly, to see it in their self-interest. We had break down the data according to provinces as to what it would mean for improving the retirement for people living in their jurisdiction. We look at longevity, what it would look like 10 years from now, 20 years from now if we didn't do this. And all these people will be living in poverty in your provincial jurisdiction. That wasn't a good thing. And so the province kind of come on board eventually. But we also had to work across political boundaries, with all different finance ministers who were liberals. Some were conservative, and some, of course, were NDPers. And that was the exciting part of the work, is to convince everybody that this was the right thing to do for the country. And more importantly, we should try to reach a consensus. Of course, the perseverance. We spent a lot of money in the Congress. I think for the time we were involved in this campaign, we spent $20 million of our own resources on the campaign. But it was also about our own image, connected to we can do better, and also the public saw the CLC of doing something that could benefit everybody. It was not talking about our members, it was talking about the country and why it was important. In 2010, Ontario government, my friend Alex was working then for the finance minister of Ontario. They finally got on board, and it was a monumental shift in the politics. And similarly, at the same time, the federal government, the federal finance minister, who I later, at the time, weren't very good friends, but did become very good friends with Jim Flaherty. And he actually said, I think we should find a way to do a modest increase to CPP. And I thought we were starting to have momentum. I did spend a very cool December meeting in Whitehorse. If you don't know where Whitehorse is, you can look it up on the map. It's the far reaches of Canada's north. Our finance ministers gathered, and actually it was a turning point. They came out of that meeting, thought maybe we could have a consensus to do this, to go forward. And it was really important at that public perception starting to change. Of course, the media was following the campaign, and many of the editorial boards across the country, including both progressive papers and not some conservative papers, all of them wrote editorials in support of the expanding the Canada Pension Plan. And many of them did it several times. Said this is an idea that, this should be embraced by our political leaders. Of course, the one obstacle, of course, despite the federal government saying they wanted to do this and then changing their position in 2011, 6 months later, the Prime Minister at the time, Stephen Harper, for ideological reasons, said we should not proceed with the expansion of the Canada pension. And the argument was, the increasing taxes, even though the Canada Savings Plan is a savings account, it's not a tax, felt that this was going to bankrupt the economy and what have you. But then there was an election in 2015. The CLC and its affiliates redoubled their effort to make this a political issue, and the two major parties, the Liberals and the NDP, actually had it as part of their platform, that they wanted to expand the Canada pension. And of course, Harper government was defeated in 2015 in October. And immediately after that, the new government was elected. Their first budget, they did indicate that they wanted to proceed with the expansion of Canada Pension Plan. And in 2016, we were successful. The Canada Pension Plan is going to increase by 1/3 going forward, starting in 2019. And it was a significant achievement on behalf of working people in the country. And also, I think it put the labor movement in the central part of this campaign. I was there in June of 2016 with the finance ministers when they made the agreement. And the thing that I did reflect on, first of all, despite the many years when my colleagues asked me to shut down the campaign and to stop, we refused to. I said no, until we achieve this objective, we are not going to quit. It was the longest campaign in the CLC's history. It lasted for about 10 years, and we spent a lot of money on it. But in retrospective, I think my colleagues will agree it was one of the best things we ever done. We certainly have increased pension literacy in the country. 2, we achieve a major objective for our next generation of Canadians. My daughter will benefit from this at some point, and hopefully she'll take care of me a little bit better when she gets older. And more importantly, I think that it showed that you can build consensus in a country as complex as ours and as challenging as ours to do the right thing. And the last point I would make, I have benefited enormously from my relationship that we're able to achieve with working with a variety of political folks in the country to move this along. I think I played an important part of it, but more importantly, it was a significant part in, of course, trying to build a better pension system for working people in our country. I'm sure you'll have many questions. Thank you so much.
Thank you. Thanks very much. So great achievement.
Could
Jason?
we actually keep that slide up? Would that be possible? Thank you. I was always told to work smarter, not harder, so I'll abscond that slide. So good afternoon. Thank you for attending today, and thank you to the Brookings Institution and the Retirement Security Project for hosting this event and having me here. So the question I was asked to do was, one, does Canada offer any lessons for the U.S.? And generally speaking, yes, we can always learn from other countries' experiences. So I was asked to give sort of the comparison, what's similar, what's different, and then some sort of political outlook for reform in the U.S., what we might learn from the Canadian experience as we try to do reform of Social Security in the United States. First, similarities. On the surface, both provide a mandatory old age pension system with some protection for disability and survivors' benefits. Focusing just on the Canada pension plan portion for a minute compared to Social Security, both are funded via taxes on wages, split between the employer and the employee, up to a maximum amount of covered wages. In the United States, we have a 12.4% contribution, 6.2% by the employee, 6.2% by the employer. In Canada, it's 9.9%, so 4.95% each. Both systems can be said to have what we call earned benefits, where a person has to work and pay into the system in order to be covered. And benefits are based in part on how much you pay in. So both in the U.S. and in Canada, the more you pay, the higher the monthly benefit amount will be under both programs. Further, the longer you wait to claim benefits, the greater the monthly benefit check. So there's a delay to claiming, which is very important. And similarly, there's a reduction for early claiming, if you look at it that way. And both plans have that similarity. However, the level of taxation in the Canadian system is lower. So if you want to think taxes, Canada's lower than the U.S. They're beating the U.S. in that part. Than the U.S. Social Security system, and also the benefits are lower are lower as well. So on average, basically, the Canadian pension plan is half of what the U.S. Social Security will give at an average benefit level. It's also important to note, think about similarities of reform. In many ways, the reforms were driven in the Canadian system partly because of a decline in defined benefit plans for the employers. They're just going away. We now see that happening in the U.S. as well. For those of us who are familiar with the U.S. system, we used to talk about the three-legged stool, which had Social Security provide basically 1/3 of your income retirement. You had a defined benefit plan from your employer doing 1/3, and you had 1/3 that was relying on you for private savings. Right now, Social Security is still designed to replace about 35 to 40% of your income in retirement. A DB plan, you may not even have one anymore. If you do, some of them are very underfunded. And of course, the personal savings rate now in the U.S. just went back down to 3%. So in some ways, you're thinking about a three-legged stool, oftentimes looks like a pogo stick for many people, and a very short pogo stick at that. So we are now starting to see that sort of pressure in the U.S. with the decline of DB plans and the rise of DC and the shift of risk back to employees, how we might mitigate that to make sure we have solvency for Social Security and what that means for our program going forward. Now some differences. Comparing the U.S. and Canadian system is not exactly an apples-to-apples comparison. I appreciate this chart. It's wonderful. Thank you for putting it together. The U.S. system is based on payroll taxes, while the Canadian system is a combination. The Canadian pension plan is based on contributions, as I said. The old age security is based on general revenues. There's also a guaranteed income supplement in Canada, which is similar to the United States' supplemental security income for low-income, age, blind, and disabled people. So there are similar sort of structures, which is pointed out here in the various stages. So they're similar in that regard, but not exactly apples to apples. The U.S. also has a more generous ability to privately save in tax-deferred retirement accounts. So the limits of the contributions you can do in Canada are much, much lower than they are in the United States. So there's a greater reliance on individuals. However, that also creates further inequity because those who can afford to save more tend to save more. Canada has another thing to consider also is the healthcare system. So one of the goals, of course, of any sort of public pension system is to reduce poverty in old age. The Canadian system, of course, has a single-payer healthcare plan where the United States does not. That said, though, the United States is still a big payer of healthcare. For example, Medicare and Medicaid, and both those programs have ties to the Social Security system. And it's important to keep this in mind when we talk about reforms to Social Security, because oftentimes it's considered in isolation. We need to consider it holistically when we think about Medicare, Medicaid, and the health care, because premiums for Medicare are taken from the Social Security check. So it's important to consider these two components even when talking about the reforms in Canada. In the U.S. Social Security system, if you're eligible for SSI, or supplemental security income, you automatically receive Medicaid, and if you're on Social Security disability, you get Medicare after a 2-year waiting period. And again, Medicare payments are deducted from your Social Security check. But The biggest difference, and the one we're probably going to highlight when talking about what kind of reforms we could do in the United States, is the management of the trust fund, if you will. So in the Canadian system, they actually manage the payroll taxes. They're received and put into a portfolio of stocks, bonds, and other assets in the Canadian pension plan. While the United States Social Security system, by law, has to invest in special issue U.S. Treasury bonds. In essence, Social Security loans its assets to the U.S. government, reducing the U.S. government's need to borrow from the public until the point at which Social Security seeks to cash in those bonds in order to pay benefits, where the Canadian system actually invests, again, in marketable securities, real estate, infrastructure, bonds as well, more of a managed portfolio to maximize, if you will, returns while trying also in some ways to minimize risk. Even though the Canadian system invests in marketable securities, it is not a system of private accounts. Canada does not have where you say, this is my account, my name on it, it's my benefit. It is still in some ways a DB plan with a defined benefit level, but again, the assets are managed in marketable securities, or a portion of them are. It is a public system with earned benefits. There are minimum and maximum monthly benefit amounts, just like in the United States, but again, the assets are managed much differently, and that also leads to the issue of solvency. The Canadian pension plan is considered to be pretty well funded.
75 years.
Well, better than ours. The U.S. plan is definitely in need of the U.S. plan is definitely in need of reform. It's important in the U.S. to keep in mind, because of the way we set up the trust funds, there are actually two different distinct trust funds. Very often you hear the Social Security trust funds, plural, and the public talks about them in the media as if they're combined. They don't have legal authority to borrow from each other, but Congress often passes laws to allow that at some point if there's shortages. But in general, if you think about it on a combined basis, the combined insolvency date for the two programs is 2034. For the Old Age Survivors Insurance Program, what we consider to be basically the retirement program, it's 2035. The disability program is 2028. But again, on a combined basis, you're looking at 2034. At trust fund insolvency, if we do nothing, no reforms, nothing increase the payroll taxes, no change in benefits, we just go on as nothing is occurring, revenues will only be enough to cover about 3/4 of scheduled benefits. Sometimes you might hear the difference between scheduled and payable. Scheduled is what we've told people we're promising to give them. Payable is what we can afford to give them. And basically, it's a 3/4 haircut. So if nothing is done and we rely just on benefit cuts at that point in time, those people on Social Security will get basically 75%, maybe a little bit less. It's important to think about the crisis that sort of leads to reform, and how in Canada and the U.S. In the U.S., it's kind of myopic. The last time we really had a major reform for Social Security was 1983, and it really took a crisis. Basically, the checks were not about to go out. But Social Security's total financing shortfall today is now larger than it has been at any point since the 1983 reforms. And indeed, we need to have some legislative changes. The longer we wait, the greater that delta grows, and the greater the magnitude will be. To give you an example, to place our trust funds back in a 75-year solvency, you would need an immediate increase in the payroll tax equal to 2.83 percentage points. That means going from 12.4% of your payroll to 15.23. For those who want to do the math quickly, that's a 23% increase in the payroll tax. A lot of Republicans are not going to go out there and advocate for a 23% increase in the payroll tax to fund Social Security. On the flip side, we could also do an immediate reduction in benefits today of 17%, which I'm sure no one wants to go out to their constituents and say, congratulations, we're going to make Social Security solvent by cutting your benefits by 17%. It had to be 20% if we only applied it to new beneficiaries. So if we kept those who are on it harmless and said, starting for those of you who file tomorrow, it's a 20% cut. That doesn't sell well either with constituents. We could do some combination of the two, and that's usually what ends up happening. To give you an idea what this means, though, in dollar magnitude, to put it in context, economists love to talk about present value, which is how much money do I need in the bank today to cover all my liabilities going forward. On a 75-year basis, the U.S. Social Security system is now short $12.5 trillion on a present value basis. We already have $20 trillion in debt. GDP is about $19 trillion, and that's for a 75-year horizon. There's also a number they call the infinite horizon, which is imagine we could go infinite and live forever. What does this look like? That number would be $34.2 trillion. So the magnitude at which we're talking about for Social Security crisis, people say it's not going to happen until 2034. The crisis is already here, and we're just not doing a good job talking about the magnitude. You asked me to think about sort of the general comments and politics of this. One of the things you said about what made the Canadian experience successful is that you had unity, focus, and sort of a shared effort, all of which does not describe the U.S. political system today. There is not much appetite for reform right now. The current president has said he's not going to touch Social Security. There's a big divide in Congress, not just by party, but even amongst and between the parties, within the parties, about what should be done when it comes to entitlement reform and Social Security. So there's always this question of, can we do things on the margin? Can we try to do things like try to get better investment returns, take the Social Security trust funds and put them into marketable securities? What does that look like? That buys you a little bit, but it doesn't solve the problems. Further, there's no such thing as a free lunch. I've heard too many actuaries and financial advisors say, you want to have a better system, get a higher return. Sure, that sounds great. We'll just go get a higher return, without talking about what does it mean to maximize returns and minimize risk. Usually they kind of go hand in hand. The higher your return, the higher your risk. If you take on more risk, even to get a higher return, at some point you may have a market downturn, then who covers it? In the US, it would still be the taxpayer. So we can't just talk about the idea of trying to seek greater returns on investment without talking about what that means for the risk and who bears that risk. But again, Social Security must be reformed to remain financially viable so that its participants are treated fairly. This also includes generational issues. The longer we wait, the more the millennial generation we have now is going to get screwed. If we talk about the idea of reducing benefits, but we hold harmless those who are currently on benefits, and raising taxes for current workers, that means millennials get hit both ways, with higher taxes and lower benefits. So they're going to get squeezed. That could cause some intergenerational conflict, but it also, from an equity standpoint, just doesn't seem fair. We also need to focus on things like reining unsustainable program costs. We need to encourage personal savings and investment, and again, a better understanding of pension systems. Financial literacy in the United States is not very good overall. So any sort of effort that talks about how to reform Social Security, what it means, should include a literacy component about what is a DB plan, what is a DC plan, what do you need for retirement? Are you going to have higher healthcare costs, lower healthcare costs? Do you want to travel? What does replacement rate mean? Some people don't even know that. Do you base it on your last year of income, your last 5 years, an average of your lifetime? Different measures give you different results, and a lot of people don't understand. And we still see some financial advisors, I think, who give poor advice. So a literacy program would be very helpful in the United States. Further delaying basically threatens our ability to actually keep these programs as important and financially responsible as they are now for Americans. And again, I just want to point out, the Social Security shortfall today is roughly twice as large in relative terms as during the Social Security crisis of 1982 and 83. In other words, things have been delayed to the point where the measures necessary to sustain Social Security today have to be nearly twice as severe as they were in 1983. So this is the magnitude of the challenge we have in front of us, and again, time is running out. We need to do something. We need to think about sidecar accounts, open MEPs, some sort of maybe auto-enrollment, think about what we can do to encourage delayed claiming for Social Security benefits so they actually have greater protection in retirement. And again, I think the lesson from Canada I would put in here is twofold for the United States. One, think holistically. Think about how you match the responsibilities and benefits of a private and public system and how those two can come together to sort of maximize returns, minimize risk, but overall increase the level of protection for senior citizens and older Americans in the United States. And lastly, the importance of having a diversity of stakeholders agree. And you mentioned it was a 10-year campaign for you. Can you imagine if we can get Congress to agree to do something that would take 10 years of educational effort in the United States? But that's sort of the magnitude we're looking at. How do we change the nature of our politics to allow for a long, sustained campaign of education where we can talk about what is the problem, why is it really a problem, why can't we just not ignore it and let it go away, what the reform options are, who wins, who loses, how it benefits, and then put something in place will take time. We need to have a large coalition of stakeholders to do that, and that's the biggest lesson I would take away from the Canadian experience.
Great, thank you. Thank you very much. We're going to, I've got a couple questions to start with here. One of the things that Jason pointed out that to me is one of the crucial elements of your campaign was that rather than just focusing on the CPP, you focused on the overall retirement security of Canadians. And I think that's one of the serious mistakes that we make in the United States. We just look at Social Security and that's all we discuss rather than the whole thing. You mentioned that one of your, part of your campaign was to increase the knowledge that both your members and other Canadians have of the CPP and the way it works, to increase the ability. How did that go? How hard was that to achieve?
Well, a large part of it, of course, we had to dumb the language down that people could understand. I mean, no disrespect to the pension experts in the room. I think we tend to talk about pension up here and trying to get people to, and large part of this, what we did, we took the average payout of the CPP to remind people on a more kind of mundane, here's what you're going to get. If you don't like this, there's something you can do about it. And then they realize, oh, wait a minute, that's all? And the other side to this, of course, we wanted a variety of people having that conversation, seniors taking ownership to talk to their kids and their family. Workers who belong to a pension plan and may live in a household where their partner or somebody else don't have a pension plan, why this campaign was important. Mm-hmm. And of course, trying to bring public support where the media were actually covering the campaign in many aspects. Actuaries, who wanted to talk about. There were some, of course, like any campaign, there were criticism from some circles. Well, why you just exclude all the poor people so they won't have to pay more? And we said that's not a bad idea, but I believe in the principle that if you work, you should pay into your retirement. And we did talk to the new government about how we could use the tax system to offset anything lower income people would pay into the system so they weren't penalized for contributing towards their own retirement. Part of it is constantly having to think out of the box. How do you address these more fundamental questions? We also had, when the campaign started, we had 3 objectives, and then it ended up being a 4th. One was to increase the CPP, double the benefits. The second was to increase what was called GIS, which the poorest citizens get this benefit because they're poor. They increased by 15%. If it went up by 15%, you will eliminate all seniors' poverty in the country. The previous government did increase it by 3-point-something% in their 2011 budget. When the new government was elected in the first budget they brought down in 2016, they added another 8% for single seniors, so it got to, the GIS actually had a close to 11, close to 12% increase in the GIS. I have a 93-year-old mother. She gets that benefit, so I could relate to directly what she got and why it was important to do that, because we have done a good job at seniors poverty in the country. I just think we could do better, and if we increase their benefit. The other one was also to have pension insurance for private insurance. We don't have the U.S. scheme. We have it in the province of Ontario, but not nationally. We were advocating for that, and of course, but then there was a 4th demand. The previous government had actually changed the retirement age from 65 to 67. And there was never an explanation to the country why this happened. And our Prime Minister went to Davos. He had to say something. So he said, I'm going to increase the retirement age from 65 to 67. And of course, we took this on to say we got to roll it back, because we couldn't find the economic argument of why this should happen. So we did achieve that also in 2016 budget. The government rolled it back from 67 back to 65 at the end of the day. But a large part of the literacy was ongoing work within the movement and the public. And I'll end on this one point. There's the equivalent of your U.S. coverage here and your politicians. We got CPAC in Canada. And 1 December, for some strange reasons, stupid people like me do this. I'm watching CPAC, why maybe I had not meant to do with my time. And they were covering the CPP debate was happening in the country. And they were in a shopping mall asking ordinary people whether or not the CPP should be increasing. And ordinary people responded to this campaign and said yes. And they said, well, why? They understood what their benefit was. So I thought in some way the message was getting out and people were relating to this campaign. So we had reached the public in a broad way. And when the public opinion was measured, every time it was measured, the support was this high for the increase to the CPP.
That's great. That's a huge accomplishment. Jason, as you have mentioned in a thoroughly depressing terms, thank you for that.
Well, Bill did say no spin, basically. It had to be, all straight talk.
Yeah, so no, it was all straight talk. I give you full credit for that. Just depressing as hell. So that's just. But one of the differences is that in our case, any sort of a reform has basically got to fill a hole as opposed to improving benefits. Now, we know that our Social Security system is woefully insufficient for lower-income workers. How does that fit in with the overall discussion?
So I can sort of take lessons learned just from your comments just right now. The idea is you sort of focus on benefits as opposed to costs in some ways. What we need to do in the U.S., again, is focus on the benefits of reform. So one is, you avoid, obviously, a 25% haircut, but the other is we could do things with the program to target a higher benefit amount for lower income people. So again, with a progressive benefit, you can take from the top end a little bit and increase at the lower end, sort of smooth out the curve, if you will, to give greater protection for lower income workers. And I think that's a benefit that could be sold on the need for reform, and then why we're also plugging a hole. And I think the other part of this too is, you have some general revenue transfers. I think the U.S. is going to go to a point where we're going to have some general revenue transfers to plug the hole, and we'll have to also market holistically that there are Social Security reforms, there are tax reforms, and we're going to have to do something on the private side to make sure people will actually want to invest in their own retirement through a private account, whether that's auto enrollment, sidecar, expanded savers credit, something so that when we focus on discussions, it's not just look at Social Security and people can pull out the costs and benefits. It's here's the overall holistic approach to retirement security that we're offering when we do reforms. We have to do it that way.
That sounds good.
Could I just make one of these points around the question of cost, because, with economists in the room, no disrespect, when we were struggling with this issue about cost, how do you explain this to ordinary people? We tried to figure out what the cost was for the doubling the benefits, and we dumbed it down to say it would cost you a cup of coffee and 3 Timbits. Canadians go to this place called Tim Hortons, a donut shop and a coffee shop. Yeah. So we dumbed it down to say for 1 cup of coffee and 3 Timbits, you can double your benefits. And people said, that's reasonable. Yeah. But again, we tried to demystify, how people relate to cost, and it was an important part of getting buy-in into the campaign and why it was important.
It is very hard in the U.S. to sell tax increases. I mean, one we've been talking about for infrastructure is an increase in the federal gasoline tax, which most people don't even know right now, but the state level is usually higher than the federal. What the federal tax is just 18 cents per gallon. And if you went out and said, how about if we raise the gasoline tax by 2 pennies? Would that sound good? Oh, 2 pennies. All right, but do you want a 10% increase in the tax? No. That's and so again, how you market this and sell this is sometimes very challenging, but it's important to learn these lessons.
It is. Now, I have actually about another 15 or 20 questions, but rather than taking up everything, we're going to open it to the floor here. We've got microphones that come by. Please just give us your name and any affiliation if you've got one. So.
Thank you, Herb Rose. I liked some of the things that you said pushed your plans over finally, and I'm wondering, I have 3 short questions I'll pose. A, is there any chance that we could send our Congress people to Whitehorse? And B, can we leave them there?
Yeah, when we take it?
A little bit more seriously, however, I've always considered the Social Security benefits as a Ponzi scheme. And the ways that it seems to me you could fill this gap that we have would be to increase the number of immigrants or the birth rate in this country. Currently, neither one of those sounds feasible. And the other is to, once again, perhaps raise the retirement age from 67 by a year or a year and some months. Do you consider any of these approaches feasible?
All right, let's get a couple questions and then you can respond. Yes, ma'am.
Yes, mostly small questions of clarification. In the United States, June O'Connell, in the United States, the benefits are capped at, or the payments are kept at $127,000 roughly. And I thought I understood Mr. Yosef to say something like 55 or 57,000 that isn't on the chart. And that's really quite a difference. And the second thing related to the voluntary savings, because there's a question in the States now about to what degree it will be from untaxed dollars until the future. So I'm wondering, with the voluntary savings in Canada, is it pre-tax dollars, post-tax dollars? If you could just clarify those two things.
All right, and one more here, and then we'll.
Yeah, this relates to the previous question. It's Carl Pulzer. I have several affiliations, but the only ones that count here are I'm in both pension plans. So, I'm in the Canadian pension plan and the Social Security. But I think that my question is simply about clarification. I think the one major difference is the guaranteed residency payment that you get. And it's fairly substantial. We don't have that unless you're blind, disabled, et cetera. And could you give us a sense of how that compares to the pension? Like the average Social Security here is about $15,000 and the median too. And it seemed like about half that in Canada for the pension, but about for the other half, how much does that residency payment fit in there?
All right, we'll do these three, and then we'll come back for hopefully another round of three.
You've never been to Whitehorse? They're really nice people there. You would not want to do that. But the importance, I think, what needs to be learned, and I tell these stories because, long-term campaigns about public policy need to inform you and to assist you. There was a guy named Colin Hanson. He was a finance minister of British Columbia. When he was going to the Whitehorse meeting, I had met with him prior to talk to him about, he needs to support us on this effort. And he was completely skeptical. He says, nothing good will come out of Whitehorse. You're wasting your time saying, I'm not interested in reforming the CPP because we'll never agree. And that was his conversation. Then anyway, just before the meeting, I flew back one more time to Vancouver to meet with him, and I wanted to talk to him. I said, and he did agree to meet. I said, could I ask you to do me one favor? He said, sure, what's that? I said, could you keep an open mind? If there is a consensus, would you change your position? Because he was going to do his own thing in BC. They had a plan, they had a proposal, they had talked to the public. Pretty well he had support. And he said, I can do that. And in Whitehorse, he did a 180-degree turn. Because he thought it looks like there was going to be consensus at the national level. What he didn't know was going to take another 9 years. He's no longer a finance minister, but today I still remember him very dearly. Because had it not been for his openness, we wouldn't have gotten there. Because the conversation in the room around the ministers made all the difference. The point is, the Canadian system is unique. It's the provinces as a custodian. The federal government is really the manager of the CPP. And to a large extent, you got to find ways that I think most people had came to the conclusion this was not just a CLC proposal. This made a lot of political sense because they were looking at the demographics 10, 15, 20 years out the road. They can see the challenges coming on the horizon. Unless we're going to increase private savings and coverage for pensions by workers in the workplace, we got a real problem coming, and we could do something that would bring the country together, and it would be very little cost going forward. So in that sense, there was some benefit in that regard. The max we pay on is about $53,000. That's going to go up, by the way. So you make more, you pay more, and that's going to increase with the enhancement coming. For people like myself, we will be paying on a higher amount. I think it's going to go up to $80,000 plus that we're going to be paying on going forward. So it's going to also give you a better benefit when you retire. Most of the folks who make higher income in the country, actually, it's the best benefit you can buy. Because even if you were to take your money, you're really successful investing on your own, you couldn't get this benefit back at the end of the day. What the CPP provides, and more importantly, it's indexed to inflation. So you're never going to lose the value when you retire at the end of the day. But you do pay in a higher amount, and it's a small amount versus what you get at the end of the day. In regard to the OAS, the OAS is it's about $6,000. But after $100,000, you start getting clawed back. When your income gets to a certain level at retirement, they start clawing it back. And so if you're, for most people, It is an important part of the retirement scheme, so that's integrated with your CPP and your workplace plan at the end of the day, so everybody kind of knew what they're going to get. When the Prime Minister did change the age when you're going to start collecting, everybody saw this was a huge problem. And workplace pension plan, who would take that into consideration with their calculation, was going to be, again, facing some challenges. And so one of the things we wanted to ensure we're going to do. But also for workers whose life, their body had worn out, they had promised this benefit, and there was no argument why they shouldn't get it. Trying to get the government to reverse it was an important thing. I do recognize, we're all going to live longer, and our pension is going to have to last that much longer, but it's now rolled back to 65. It's about $6,000 a year.
I'll quickly just add. So one, you noticed again, the contribution max, the payroll tax max, if you will, is basically half. But again, the payroll tax rate is also is lower. So ours is 12.4, theirs is 9.9, and their benefit level is basically half the United States. So it's not as generous a benefit. But again, the point here is think holistically about where things are coming from. But it is lower. So there's always been this impression that the U.S. is a low tax state and then Canada is always high taxed. And there were jokes about people moving to Canada after the current election, but it might be financially even better to move to Canada because of the way they put their fiscal house in order. So it's just important to point that out. When thinking about, you asked about immigration and fertility. Those are two of the biggest drivers that changed the trust fund insolvency date without making policy changes, if you will. And it's very important to consider what this means when we think about, again, a holistic retirement system. Because if you think about millennials, if you want to talk about it in a system that's like a Ponzi structure, should millennials have more kids? So right now they're delaying having children, they're delaying getting married, they're delaying moving out of their parents' house. Because of potentially student loans, they're delaying retirement. So all these delays in some ways make it more expensive and to basically fund Social Security. So we need to think holistically of what does that mean for child care credits? What does it mean for the payroll tax rate? What does it mean for education benefits? So we got to think holistically in the U.S. about reforms, just not myopically on Social Security. And immigration in some ways needs to be smarter. So I'm not an expert at all in the Canadian immigration system, but I used to live in Detroit, which makes me a partial expert. I think it's the only place in the continental United States you can look south into Canada. But I used to spend a lot of time in Ontario, and I have friends who had a cabin in Big Basswood Lake, which is through the Sault Ste. Marie and over. And one of the people who had a cabin there were German immigrants into Canada. And they said at the time, the deal was they could immigrate to Canada if they brought $250,000 and hired 3 or 4 workers. So the idea was it wasn't just open immigration, it had to be targeted for those that could benefit the Canadian economy. So we need to talk about what does a targeted sort of immigration policy look like to help the U.S. for a variety of things, economic growth and Social Security, and I think that's important. And then lastly, Carl, just because you want about the residency benefit, the clawback's important because, again, they're thinking holistically about retirement. One of the problems in the U.S. is we have various things that people don't realize look like a clawback. So we don't have means testing of Social Security, but we do tax retirement benefits depending on your income level. And then there are sort of strange things that catch people by surprise. The government pension offset and implementation provision, which if you had employment in non-covered Social Security, you might get your Social Security offset because of that pension. And sometimes people don't have the understanding that's going to happen, and they get a statement from their employer's benefit plan saying you're going to get $1,000. They go from Social Security saying you're going to get $1,000. They're going to get $2,000. Then Social Security claws back $500, and they get upset. So some of this is also thinking holistically about how this merges in with other pensions to figure out, again, financial retirement security.
Thank you. All right, let's see, question over here, and we'll do a quick round of 3 or 4, and then we'll do quick answers and conclude.
Yeah, I'm Richard Hines. I'm an independent consultant, but I'm here on behalf of the American Benefits Council today. You described the plan as fully funded and a better deal than you could get in the markets. I'm curious as to how you can achieve this remarkable accomplishment, and what are you assuming is your investment returns, real investment returns, to achieve that, and what happens if there's a shortfall or a liquidity issue in the portfolio? What happens if you come up short, or if you get a lot of claims in a down market? How do you manage those finances to achieve this remarkable outcome?
Next, let's see who we got here. Here.
Hi, thank you really for a very fine discussion. My name is Dr. Mindy Reiser, a sociologist, but I'm also on the board of governors of the Labor and Employment Relations Association here in Washington, D.C. It's part of a national grouping. For Hassan, the benefits are lower, but I wonder when you were thinking about the whole package, housing costs, healthcare costs, and how all this fits into what a retiree will have to deal with. The benefits, I think, are more generous, at least in terms of health. I don't know about housing costs in Vancouver. They must be through the roof. But I want to know how you factored in the holistic world that the retiree faces in terms of the benefit levels.
Let's see, we had one more behind here, right here, and then we'll go to answering and quickly summing up.
Okay. My name is Bruce Klein. I'm from the Pension Policy Center. And how did you estimate when the trust fund was going to run out of money? And what date was that? Because I didn't hear you say that.
Is that for me?
Yeah.
Oh, so I'll answer that one quickly. So it's the Social Security actuaries. So I didn't sit down with any pen and paper. I just went to their website and read the report. But they basically do a demographic analysis that looks at the age population, age sex adjusted, so male, female, longevity issues, mortality issues, benefit levels, the rise in inflation, because again, it's an inflation protected annuity. They look at payroll taxes coming in. They look also at revenues that come in from trust fund assets and taxation of benefits and expenditures. And when they cross, they say you're out. And that's the shortfall. So that again was 2034 for the combined trust funds, 2035 for the old age survivor program, and 2028 for the disability trust funds.
All right, do you have any quick concluding comment, and then we'll give Hassan the last word?
Well, I think the sort of the quick one to wrap up and also answer the questions on fully funded, which he'll probably get to. Keep in mind, again, there's no free lunch. If you're going to increase your return, you're going to increase your risk also, so we should talk about who then bears that risk. Is it the beneficiary? Is it the taxpayer? Is it general revenues? Where is this coming from? That's a good question, which I'm sure you'll get to. And I would just wrap up by saying, when again, thinking about reform in the U.S., we have to sort of learn the lessons that we have to go holistically. We have to talk about what does it mean to have somebody have a financial retirement security holistically. What does that mean when it comes to healthcare? What does that mean when it comes to Social Security? What does it mean to come to your private pension if you have one, your 401k, your outside savings? What can we do to maximize that? Because if we just focus on one thing, we're not going to get reform, and we'll just get to the crisis point, and that's where you usually get bad policies. So we have to start talking holistically now as we go forward.
Yeah, very briefly. One of the measurements in terms of the CPPIB, which is it's an independent structure that manages the CPP account, and this was changed back in the 90s by the former finance minister, then Prime Minister Paul Martin, who introduced this change to kind of have the government a little bit at arm's length. So it's managed by an independent agency. In 2008 was one of the worst times you can measure performance. The Canada Pension Plan, the CPPIB board was one of four that fared the best in regard to the downturn in terms of investment and their overall performance. But they've got, their investment is in not. They take the long-term view that, we've got to make sure that the benefits are going to be paid and we've got the resources. So they take very prudent approach to their investment, its stocks, its bonds, its the whole 9 yards. And they do come, like we invite them to come to our board to talk to people about what is it that they do and where the money is invested. And by the way, all this debate about the NAFTA thing, one of the biggest things, most of their investments actually here in the United States. And there's a big worry as to what may happen with that. But it's got a holistic view. The numbers I gave you about 75-year solvency didn't come from me. It came from the CPP actuary, who actually said this is how long the plan is solvent. And the last time I checked, most of what the CPPIB board have been investing in and the earned investment is not needed to pay benefits. It's way beyond. They haven't even factored that part into how much reserve they've got in the plan for whatever future challenges we may face going forward. The question that was asked about, what we took into the factors about what people living longer, household debt and whatever. We've got, like most countries, we've got high household debts, about 160-something%. So we know people weren't saving on their own, despite generous tax savings. For RSP, you could get a good portion of your income back if you put it in the account, or if you put it in tax savings account, People are not taking that up. Higher income is taking that up, using those accounts to obviously save for their retirement. But the average population, is not, because their debt load is so high. They're trying to buy a house. They're trying to raise a family. And we figure the only way we can help this generation struggle with these issues is because it's compulsory savings. It's going to come off your paycheck. You have nothing to do with it. And like it or not, you're going to get a better pension when you get there. Most people think it's a good thing because the benefits have been paid, it's been promised. Some people have been making an argument, the system can't meet its obligation. There's no evidence to suggest that. But the larger part of our argument, we need to double the benefit. We did achieve a 33% increase that was starting to happen, but we felt it should have been much higher, because there was the first generational improvement to the CPP since its inception period. The last point I'll end on, these are big public policy discussion. And if you're going to achieve the greater objective, one, you have to come with a longevity approach to it, that this will take time. And you got to build support, and you got to build it in as broadly as you can to get a consensus doing that. I was involved working with my colleagues in the labor movement on this campaign. I can't tell you, every time I gave a speech, they said, oh, no, not another speech on CPP, because they've heard it a million times. But the importance, the last point I would make, we had made this commitment when we started the campaign. We will not quit this campaign until we win. Now, I could have been gone or dropped dead, and maybe the campaign would have been over, because I was very passionate about it. I was the face of it. I was the interlocutor with the financial ministers, the finance ministers, and the government for the most part across the country. And that was personal relationship built over a 10-year period. And my friend who will be on here a bit later, Alex Mazur, was a good supporter when he was working in the finance minister's office in Ontario. Always was, encouraging me. But in addition to that, there was a lot of other people playing that role. I think the reason we won this, because the movement had made a decision. This was a Canadian moment. We could do something to improve the lives of working people in the country, and we had an obligation to step up and keep fighting until we actually achieved that objective. The success, I think, came because many efforts from activists, leaders, and other people in the country felt it was also the right thing to do, and we were very, celebratory to ensure that it did achieve within that period. But more importantly, there's bigger work. The last thing, one point I want to make: we just started a new campaign. And this is pharmaceutical is not part of the healthcare system in Canada. If you go to the hospital and you get sick, you'll get medication. Otherwise than that, you have to have private coverage, or in some cases, it's based on your income and what have you. So we launched a new campaign to make pharmacare part of the healthcare system. And that campaign is rolling out. It will be equally as daunting as the CPP campaign, and it will face many opposition, but we've made the commitment. We're going to include pharmacare in our healthcare system, and like it or not, they may take us equally as long, but we're hoping that it will not take as long. We learned much from the last campaign, and we'll have a better healthcare system for doing it going forward. Thank you so much.
Thank you. And we've got another program coming in a few years, so this will be great. All right. Quick note, what we're going to do at this point, because we ran a little bit over, is that we're going to go directly into the second panel. There are some refreshments in the back should you need a drink. And after Jason's prognosis, I think we will need a drink. But we'll go right up to the second panel. So join me in thanking both Hassan and Jason, please.